Again, welcome to Megatrade 101 video presentation on the foreign exchange market, where we're looking at the cross rates as a review of how the market has been faring out for the past 3 days for the week ending March 26th. We'll be discussing several charts here, especially starting with the euro when Fitch credit ratings downgraded and cut the rating of Portugal, leading the euro to make a new low at the 1.3266 level, where not far off from our target objective from a pivotal point at 1.3180 to 132.55, although at this current prices right now it made a high at 1.3376. However, if you compare it with the pound is working at 1.4831 from a low of 1.4770 established several weeks ago here on March 1st. We're looking at the pound, comparing it with the euro, and you could see that with this movement, the pound is basically moving lower, much compared with the euro by itself. With that said, basically looking at the euro now making a slight recovery from its down price and comparing it with the pound, still lowering at 1.4832, you would see now that the euro pound basically is moving higher back to 0.9017, where it made a low of 0.88. Let me see if I can get this thing. 0.8886. That low basically was a temporary move simply because it had a selling divergence on a price at 0.9113, as you could see here, basically with a high of 0.9150. Basically this area where the prices fluctuated, basically it filled in this gap, as you would see here on the shaded white area on the left hand side of the chart. So while the euro is basically retrieving higher and the pound basically still holding lower, this would prove that the euro pound cross rate would eventually be moving higher in tandem with the strength of the dollar index moving higher to the 82.25 level, where the strength of the dollar versus the euro, simply because of the downgrading, has made the pound basically steadier, the euro weaker, and the dollar stronger. Again, with that said, taking into consideration the euro yen has already moved higher to 123.81 price level, where the high is at 123.87, which we basically took a position here at the 121.85 level, moving to a direction where we anticipated that the euro yen would be much stronger at this point, comparing it with the dollar yen, where the dollar yen basically benefited from the strength of the dollar and the weakness of the euro. Now, basing it from our previous trend following the Swiss yen at the same time, where the Swiss francs would not make a dramatic move bigger than that of the dollar yen, where the prices right now is working at 86.63, which is higher now from the Fibonacci 50% retracement levels, where we're looking at the 87.28 price level. If and when the dollar does continue to move higher above the 82.25 basis points for the end of the week, which means that the dollar would end the week much stronger than we have really anticipated, although the 82.25 basis points were actually in our target area. We have consolidated these three major trades that we have done, noting that the prices more on the Swiss yen and the euro yen would move higher simply because of the euro pound basically stalling and the dollar making its higher movement, and showing that price levels that we are long on the euro pound, the Swiss yen, and the euro yen, respectively, and the prices of 0.9008, 85.28, 122.30, and a substantial movement on these price levels have gained us more confidence that the dollar would simply have to move higher even towards the end of this week. If you would be so kind enough to review our previous video presentations and our market view analysis since the 25th of February, you would see that the storyline on the cross rates has been our primary strategy in trading the foreign exchange market. However, it would be difficult to say that these trades would be able to provide a substantial profit objective, although there is always the inherent risk of losing in the market, and there is no guarantee that the trade results would be the same as we have presented. So please be extra careful of how you choose your currency pairs. Either you go with the currency majors or simply trend follow the cross rates at this point in time, which is more favorable than the actual major pairs by themselves. Thank you very much and have a pleasant day, and good luck and best of trading to you. Thank you and have a good day.